Thanks for tuning in to Trade for Tendies. This is episode 1. So what is this video series? This is going to be a almost daily video where I recap my trades of the day. So you'll follow along as I trade with my accounts, and we'll be using a very specific strategy in the options world. It's known as the wheel. If you play with options before, you probably have seen that the options usually are very volatile. You either win huge or you lose huge, right? You either lose the whole option, it goes to zero, or you can maybe make 100% or 200% in a day. But we're not going to do any of that. This is going to be a theta game strategy where we will collect the premiums and we will win this way. It has a really high probability of winning. So there's going to be recaps every single day of the week to give you an update on my portfolio performance, and you can totally follow along if you want. Although I'm not a financial investor, you should always do your own due diligence before you invest. So we are essentially the insurance salesman now. So for those of you who don't understand this strategy, here's a quick recap of what this strategy does. The game plan is we're going to sell covered puts. So what this means is that instead of buying a call or a put, we're going to be the salesman. So the simplest analogy I can give is an insurance company. So we are going to be the insurance company. So in order to protect people's accounts or stocks from the downside, we are going to write an insurance policy for them in return for a premium upfront. So they're going to pay us money upfront before anything could happen. They're going to pay us money. That money is ours to use, so we could do it whatever we want. We take the money, and if the option expires on that day and the price of the stock is not below the price of the strike, then you get to keep that premium, and then the option will expire worthless for the buyer. So essentially it means if you have a person who's buying an insurance and you sell them insurance, they pay you money every month, and if they don't get into a car accident or something, you don't have to pay out, you keep the money. So this is exactly what we'll do, and we will be the insurance salesman. So the strategy is we're going to sell cover puts. So our hope is that we pick the right stocks that will not expire in the money by expiration. So when that happens, we take in the 100% of the premium. However, if something does happen, let's say a stock dropped tremendously and it went way past our price, that means we're going to get assigned. So that means we're going to be forced to buy a stock at a certain price and 100 shares nonetheless. So this means you need quite a bit of money in your accounts to cover for the puts. So, but that's not the end of the world. If that ever happened to us in this journey, I'm sure it will. I'll show you how to lower our cost basis and eventually go back in profit if the stock ever go back up again. So the key here is to invest in companies that have really solid history and that are not very volatile. So if we do make money in this game plan, in this video series, we're going to reinvest all profits into REIT portfolio. REITs are stocks that give you monthly dividend, and they usually have pretty low to medium volatility, and we're just going to keep them for years and then raking all the dividends. So we're going to reinvest our profits into REITs. So this strategy is high probability of winning. Usually we only pick stocks that options. We only sell put options that give us 88% chance of winning or more. However, in exchange, we get lower the return. But if that's what you're into, you're in the right place. So let's get started. So before I started the video, last week I sold my first put option on AMD. So this is actually my first venture into the theta game world. So what this means by theta game means so when the stock, when you have extreme volatility, when you have long time expiration for a stock, for a particular option, the theta is going to be the value decay over time. So if the stock stays at the same price and then a day has passed, you will actually make money. So with this strategy, you make money when the stock goes up, you make money when the stocks go sideways, and then you have a good chance of making your money back if the stock goes down. So the stock needs to go below your strike price for you to lose money. So last week, let's look at this. I actually sold my first AMD puts for August 14, which is last Friday, for $75 strike. That means AMD has to go below $75 for me to lose this money to get assigned. However, as you know, on this Friday, AMD closed around $79, $80. So this option became totally useless. So I pocketed this whole $26 right there. So that's our first game. We made $26 on our very first put option. Sounds easy, right? It was really a high probability of success too. So what happened was on Friday, I bought on Monday. Let's go this week. On Monday, I took a look at the chart for AMD. So it seems like it's going down. It was going down, and then there was a huge spike up, and now it's just consolidating on the side. So this is still a pretty bullish chart to me, and the support seems to be around $75. So my strategy is to sell a put at the support, which is around $75. So I bought another option of AMD. I sold another put expiring this Friday, 8/21st, for $75 strike again. So for that put, it netted me $47 instantly. So I made $47 right away by selling this put. Remember, this is the premium we collect up front. So, and then this is the recap of the puts that I bought on Monday. And as you can see, in one day, AMD actually went up hugely, and as a result, the option became worthless. So as a put seller, we want the option to go worthless. So in one day, it dropped like so much money. I mean, sorry, this is in total for that option that I bought for $47. It dropped like $34 right away. So I actually made $34 on that option already. So it's really close. It's not worth like 13 cents. So I have $13 more to collect if I close it out. But I'm not going to close it out. I'm just going to let it expire on Friday and then pocket the whole $47. So as you can see, this is extremely easy. If you know a little bit about technical analysis, you should be able to pick that stock up. So for the AMD stock, you can pick out the support. So for me, it's like around $75. And then like pick a really short time frame. So for me, it's usually 4 days to expiration, or like whatever the option that's expired that Friday. That's usually what I buy. So you collect like really nice premium for it. So right now I got $47, probably in the bags. And there's the order. So I looked around on Monday and I see another chart. I look at Peloton. So Peloton is this company where they sell e-bikes for you, and really expensive, overpriced bikes with a giant monitor. And their software is like a virtual training assistant who will will motivate you to exercise. So I think it's a really hilarious product. It's probably made for rich people. I'm probably never gonna buy this or afford this. But anyway, the stock's been on a tear this year. Ever since the dip in March, it's been on a tear. So it went all the way from $20 to right now like around 67, 65 bucks. So I look at the chart for Peloton. So I can actually draw a line right here to see that it's actually still on the uptrend, right? And then I look at the candlestick action here. It seems like the candlestick is growing smaller and smaller, and there's a green reversal right here, and then there's an uptrend. So this is a really bullish pattern to me for as far as like candlestick action goes. So I decided to sell a Peloton put expiring this Friday. So what I got was a $59.5 put expiring this Friday. It's actually pretty hilarious. So $59, it's right below the support again. So it's about like somewhere down here. So you have a really good room for it to drop before you lose money or get assigned. So usually what I like to do is to find a chart that's been uptrend, and then when the stock is having well-defined support, you sell your put at the support. So even though the premium is only $21, it's pretty much free money. So provided that Peloton does not drop bigly, if they don't have any earnings coming up, that's the other thing you need to check to make sure there's no earnings coming up. I sell the option. I sell the put option for a $21 premium. So the other company I saw today was Fastly. So personally, I use Fastly at my work, and I know how powerful this service is, and it's essential to a lot of businesses. So it's a really good company, and I'm bullish on it long term. As you can see from the stock, this year it went from 20 bucks all the way to 115-ish like a few weeks ago. The big drop was due to earnings recently, which is fine. So it seems like it's finding its support somewhere over here, a little bit above 70, maybe 71, $72. So I look at the candlestick action. It seems like the red drop has been slowing down and it's now turning green. So to me, this looks pretty bullish to me. So it sounds like it's reversing, right? So I look at the chart. I'm like, you know what? I want to sell a put option on Fastly. That means I'm bullish on the stock. As long as the stock is above the support, I'm happy to collect the premium. So what did I sell? I sold right above the little bit below the support, which is $69 right here. I sold a $69 put Fastly expiring this Friday for $50 premium. So that was quite an amazing trade actually. So it was filled, and then like, what do you know, at 50 bucks, hey, you know, I think it will go up. So yeah, that's all the options I bought today. So this is pretty much the episode 1 for Monday. So if you liked our video and like to follow along, please follow, like, and subscribe our video. Also check out trade4.com. This is our trade app, our stock market app that we built, and it tells you like real-time option sweeps. It's like real-time big when the big boys buy something, it tells you right away in real time. So it really helps me in my trade. I usually use this to do my analysis to figure out whether a stock is bullish or not. So yeah, that is it. I'll see you guys on the Tuesday video. Bye bye.